Hi, I'm John Moog, Portfolio Manager of the Pengana Global Small Companies Fund. Our team's been investing in the small cap universe for the last 15 years, constructing high quality conviction portfolios in the small company space. In terms of how we invest, our focus is on investing in the highest quality businesses we can find in the space. We think that's the most important thing you can do to compound and protect capital when investing in small caps globally. We look for businesses with strong balance sheets, disciplined management teams, and governance that protects us as minority shareholders. Now I want to give you a couple examples of the equities we're looking at and buying today. The first is Brembo. For those of you who don't know who Brembo is, they make high-end aluminum caliper brakes. They have a long tradition of making brakes for race cars, for high-end performance vehicles. Oftentimes the red and yellow brakes you see on Lamborghinis or Ferraris are Brembo brakes. They have over 85% market share in the aluminum caliper high-end brake niche. It's an excellent business that's family owned. It's been growing for the last 20 years and will continue to grow given the prevalence of aluminum brakes. What makes aluminum brakes so important is that two characteristics. The first is that they're lighter. The second is that they're stronger. Again, Brembo has 85% market share and dominates this niche. What gets us excited here is we were buying this company at 11 times earnings, given some of the challenges in the auto supply chain. As we expect this to normalize, we would expect Brembo to continue to grow moving forward. However, the secular growth behind Brembo should be very appealing over the next 5 to 10 years. We've seen auto OEMs around the world invest heavily into their electric vehicle production. Electric vehicles have two traits that are very important for Brembo. The first is they're heavier than traditional internal combustion engine vehicles. The second is they're a lot faster. When you're making faster and heavier cars, what you need are stronger, lighter brakes. And Brembo is well positioned to capture meaningful market share in the electric vehicle market moving forward. We think this will drive a lot of high return growth, and we also are able to buy this company at an very attractive valuation. We think that's a potent combination for value creation moving forward. The next company I wanted to talk to you today about was Concentrix. Concentrix is in the customer relationship management business. Historically, we used to think about those as just simple call centers where we would call in and where consumers would call in with complaints or with questions about products. Today, it's a technology-led business with BPO outsourcing at the core of it, long-term customer relationships, sticky revenue, and very cash generative. We think this is an invaluable business in the customer relationship management space. There are only 7 players globally, and Concentrix is among the leaders. This business spun out from a larger business in the US, but lacks much institutional support, which is why we were able to buy it at 10 times cash earnings a couple of years ago. What's interesting about Concentrix is it's a business that grows high single digits with high returns and very consistent cash flows, exactly the type of business we want to invest in. Over the last 2 years, it's done nothing but deliver, and I think it's an interesting case study in what has happened in the back half of 2022. Concentrix itself, fundamentally, has never been stronger. However, the stock, even for a $7 billion US company with little institutional support, we see the stock sold off really meaningfully in the back half of last year. We took advantage of this and added to our position. But again, we think the opportunity to buy very high quality companies at meaningful discounts, given the sell-off that has occurred in many of these small to mid-cap companies around the world, is quite meaningful right now. And really what gets us excited about the current opportunity set. The last company I wanted to touch on today is InnoDisk. InnoDisk is a niche Taiwanese flash memory producer. For those of you who don't know what flash memory is in your iPhone or really any type of product right now with computer memory that doesn't spin. Obviously, if you're producing flash memory for iPhones, scale is the name of the game. You need to be a high production, low cost producer. However, InnoDisk operates in the niche space of providing very specific high-end flash memory to very expensive industrial machinery. So in the case you were making a $1 million MRI machine, InnoDisk would be your solution provider for putting flash memory into your MRI. They've been growing for over 20 years, given the secular growth of memory in many different types of industrial machinery. And we would consider, and they'll have a nice secular tailwind of continuing to grow in this space. Given the fact that they operate in a niche engineering-led universe, they're able to participate in this space away from the commodity space, drive high returns and growth, and that translates to meaningful shareholder value over time. Management team's been in place for over 15 years here. The business tends to grow double digits every year. It's a capital-light business that earns high returns on capital, and it's trading for just over 10 times earnings, forward earnings. This is, again, another example of the type of businesses we can find today that provide high returns, growth, and a meaningful yield on its current valuation. Overall, this is what we're excited about our portfolio. When we look across our portfolio today, what we see is a portfolio trading at about 13 times earnings that generates above 20% returns on equity with very little debt and should grow in the high single digits. We think this is an excellent time to put capital to work into this small cap universe because a collection of these types of businesses at these prices is fairly unusual.